Michael Saylor's STRC. The iPhone moment of corporate finance. Imagine a financial instrument so revolutionary that it could transform the corporate finance landscape, much like the iPhone did for mobile technology. Welcome to the world of strategies, MSTR, latest innovation, the Bitcoin-backed preferred stock known as STRC. Executive Chairman Michael Saylor has boldly declared this as the company's iPhone moment, and the implications are staggering. But here's where it gets controversial. Could this really be the game-changer Saylor claims, or is it just another speculative bubble waiting to burst? Let's dive in and explore the details. Updated on August 2nd, 2025 at 4:56 p.m. Published on August 2nd, 2025 at 4:43 p.m. Strategy. The Bitcoin-centric corporate entity, formerly known as MicroStrategy, introduced its Perpetual Stretch Preferred Stock, STRC, late last month. This offering, as described by Saylor, represents a monumental breakthrough in corporate finance with immense market potential. The STRC preferred stock has already garnered $2.5 billion, and with a newly opened $4.2 billion at-the-market ATM program, its scale could expand even further. This stock offers high-yield dividends backed by Bitcoin, designed to attract yield-seeking investors. And this is the part most people miss. The stability and accessibility it promises could make it a go-to for both institutional and retail investors. So, what exactly is STRC, and how does it function? STRC, marketed as Stretch, is a variable-rate perpetual preferred stock engineered to deliver stable pricing, robust yield, and easy access for income-focused investors seeking indirect Bitcoin exposure. The shares pay a monthly dividend, initially set at 9% annualized, based on a $100 par value. Strategy reserves the right to adjust this dividend monthly, adhering to rules that keep STRC trading close to its $100 target price. Each share of STRC is overcollateralized with Bitcoin at a ratio of roughly 5-to-1, meaning that for every dollar of STRC issued, Strategy holds approximately $5 worth of BTC. This security is senior to other preferred stocks like STRD, STRK, and the firm's common equity, but it remains junior to debt and the STRF preferred series. Dividends are cumulative and compound if unpaid. If any month's payment is missed, a dividend stopper activates, preventing payouts to junior securities until STRC is made whole. The stock can be redeemed at the issuer's option once listed on NASDAQ, which it now is, and it includes a fundamental change put right at liquidation value, plus any accrued dividends. Think of STRC as a high-yield savings instrument backed by Bitcoin, without the volatility of direct crypto holdings or the duration risk of traditional preferreds. It's designed to function like a yield-enhanced savings account, offering stability and consistent returns. Strategy raises $2.5 billion in STRC IPO. The company's IPO of STRC raised approximately $2.5 billion through the issuance of 28 million shares priced at $90 each. The offering was announced on July 21st and closed on July 29th. Proceeds will be used for general corporate purposes, including further Bitcoin purchases and working capital. The board of directors declared an initial monthly dividend of 80 cents per share, with the first payment scheduled for August 31st, 2025, to shareholders of record as of August 15. Saylor described STRC as a clean, scalable instrument that addresses the limitations of previous capital tools like convertible bonds and complex long-duration preferred shares. The product is designed to appeal not only to institutional allocators, but also to yield-seeking retail investors. Inside the $4.2 billion ATM program, on July 31st, Strategy announced a new sales agreement allowing the company to issue up to $4.2 billion worth of STRC shares through an at-the-market ATM offering. This gives Strategy the flexibility to tap liquidity gradually, adjusting issuance based on market conditions and pricing. Internal guidance suggests that strategy intends to keep issuance within a narrow band, avoiding sales below $99 or above $101 before fees, consistent with its target of maintaining a stable $100 trading price. The firm explicitly stated it does not plan to apply this discipline to its other preferred equity programs, reinforcing STRC's unique positioning. The ATM program allows strategy to meet capital needs flexibly, support its dividend policy, and scale BTC acquisitions further while preserving shareholder alignment. Why Saylor calls STRC his iPhone moment. Michael Saylor sees STRC not just as another capital-raising tool, but as a turning point in corporate finance. During Strategy's Q2 2025 earnings call on July 31st, he called the product his firm's iPhone moment, comparing its potential to the kind of consumer breakthrough that redefined an entire industry. At the heart of Saylor's vision is STRC's accessibility. Unlike Strategy's earlier instruments, such as STRK, STRF, and STRD, which he praised as innovative but too complex or volatile for mass adoption, STRC is designed to function more like a yield-enhanced savings account. If I walk down the street and you ask 100 people, do you want a high-yield bank account? 99 out of 100 say yes, he said, underscoring the simplicity of the pitch. He believes STRC solves two core problems. It strips away long-term volatility by targeting short duration and low price fluctuation, and it offers a consistent premium over typical bank yields. We've stripped down to a 1-month duration and it pays 500 basis points above your bank account, he said, describing the instrument's 9% variable monthly dividend. Importantly, STRC is engineered to trade near par, $100, giving investors peace of mind, especially those sensitive to price swings. Saylor emphasized that previous products lost retail traction when their principal value fluctuated by 5 to 10%. In contrast, STRC's goal is to hold close to par even as Bitcoin prices move, thanks to its heavy overcollateralization with BTC. If Stretch actually hits its par and it trades with low volatility, then you could, in theory, sell $100 billion of it, $200 billion of it, he told analysts. That, he argued, would enable Strategy to massively scale its Bitcoin holdings without selling any BTC, effectively using its treasury as collateral to monetize liquidity at retail scale. In Saylor's view, this combination, simplicity, stability, and yield, is what makes STRC transformational. Just as the iPhone reimagined how users interacted with mobile computing, STRC could redefine how companies tap capital markets in a Bitcoin-native way. But here's a thought-provoking question. Could STRC really revolutionize corporate finance, or is it just another speculative asset? And what do you think about the potential risks and rewards of such an innovative financial instrument? We'd love to hear your thoughts in the comments below. Disclaimer: parts of this article were generated with the assistance of AI tools and reviewed by our editorial team to ensure accuracy and adherence to our standards. For more information, see CoinDesk's full AI policy. Siamak Masnavi is a researcher specializing in blockchain technology, cryptocurrency regulations, and macroeconomic trends shaping the crypto market. He holds a PhD in computer science from the University of London and began his career in software development, including 4 years in the banking industry in the City of London and Zurich. In April 2018, Siamak transitioned to writing about cryptocurrency news, focusing on journalism until January 2025, when he shifted exclusively to research on the aforementioned topics. AI Boost indicates a generative text tool, typically an AI chatbot, contributed to the article. In each and every case, the article was edited, fact-checked, and published by a human. Read more about CoinDesk's AI policy. Strategy's $4.2 billion STRC stock ATM program explained. Brace yourselves, because Strategy has just unveiled a monumental financial move that could reshape the future of corporate treasury management. On July 31st, 2025, Strategy, Nasdaq, MSTR, STRK, STRF, STRD announced a groundbreaking $4.2 billion at-the-market ATM program, allowing the company to issue and sell shares of its variable rate Series A Perpetual Stretch Preferred Stock, valued at 0.001 per share, referred to as strategy stock. This isn't just another financial maneuver, it's a bold step into uncharted territory, and it's bound to spark conversations across the industry. Under the ATM program, Strategy plans to strategically sell STRC stock over an extended period, carefully considering market conditions such as trading prices and volumes at the time of each sale. This approach ensures that the company can adapt to market fluctuations and maximize the benefits of the program. But here's where it gets controversial. Strategy intends to use the net proceeds from this program for a variety of purposes, including acquiring more Bitcoin, bolstering working capital, and even paying cash dividends on other classes of preferred stock. This diversified use of funds could either be seen as a smart hedge against market volatility or a risky bet, depending on who you ask. The STRC stock will be sold through agents using methods defined as at the